There we go. Is it advancing?
It is.
There we go. All right. So, unlocking the future. And I love this quote by Albert Einstein: in the middle of difficulty lies opportunity. I think that's what we're experiencing in the market today. And we want to capitalize on that opportunity. So we're excited to share how we plan on doing that. Move this to the side of the screen so you guys can't see it. So what are we going to be talking about tonight? Understanding the current market, our growth within that market, our growth roadmap, strategic partnerships and investor relations, our core lines of business, and the opportunity to invest in Park Street Homes. Now go back. There we go. So understanding the current market. Of course, we all know that we've been experiencing the largest, our fastest interest rate rise in almost 2 decades. And that comes on the tail end of COVID. So inflation is still very high. And there's a lot of natural trepidation in the market. You see consumer goods are up, housing prices are up. All those things affect people every day. And what does that mean? And home building at this point is literally one of the oldest industries in the country. So we've seen several of the market challenges as home builders, and you can see that in the trajectory and history of the companies that do what we do. And the benefit of that is you get to tell the story of when interest rates were high in the 70s and the 80s. And the good thing about that is home building is a mature industry and performs extremely well consistently over time, right? So regardless of interest rates, regardless of inflation, people still need a place to live. And that's what we do here at Park Street Homes. We provide people with a place to live. One of the benefits of us specializing in the Texas market and being in the Texas market based here in Houston is that Houston saw the second largest population surge in the country between 2021 and 2022. So we're literally at the epicenter of where people want to be. And the second to that, or the first to that, is the Dallas market. So Dallas had the most people move to it. Houston is right there, second in command, and that is across the country. So I want to make sure that people understand Texas is where it's at. If you're a home builder, if you're moving here, Texas is where you want to be, because we're at the ground floor of this surge of population, and it's only going to go up from here because we have the land to accommodate it. We also have stability in our housing prices. We have stability in our markets. People can get to work. People can get home. There are jobs here. All those are fantastic factors, and one of the reasons why we chose Texas to start our company, because not only is it a great market and country, or market and state for business, it's especially a great market and state for housing. Aisha, you have anything to add to that?
No, I just agree that that this is a commodity, and investing in commodities is always a good idea. The housing shortage that we've been experiencing, they from the research that I've done, it'll take about 10 years for us to catch up to meeting the needs of the amount of houses that are needed, and us meeting them. So we're in a really good place.
Awesome. So our company growth in the midst of this ever-changing market. So of course, as the market goes up and down, people go, oh, well, our company's growing, our, pipelines, material supplies being constrained. And while we experienced the height of all the craziness and built through the COVID market, we got to see firsthand the impacts to not only our business, but also our buyer through the midst of COVID. And that was one of the biggest blessings that we encountered as a company, because it gave us tremendous amounts of feedback. It gave us feedback for what people want. It gave us feedback for the price points that make people move, make people buy, the features that make people buy, and the customers that ultimately aren't just either home buyers, but also potential partners or potential investors that are looking to grow their portfolios with our product throughout the market. So one of the things that we plan to do, and we'll go to the roadmap in just a second, is expand on those relationships through this market. So doubling down on affordable housing and entry-level homes, because in this market where costs are so high, those houses are the ones that move. People can make purchase decisions on $200,000 and $300,000 homes that they couldn't make on $400,000, $500,000, $600,000 homes. So right now is a great time to be an entry-level home builder because people need that level of housing, especially our hometown heroes, our workforce, nurses, cops, teachers. I always say entry-level doctors, but it's not entry-level doctors. It's beginning healthcare professionals
Residents.
or residents. There we
There
go.
you go.
So as the market shifts, we're meeting the market head on with opportunity and with a product that meets their pocketbook and their price line. Oh, Aisha, you got anything? And
No.
just jump in
Okay.
as needed.
Okay.
So here is our growth roadmap. So entry-level focused. We specialize in entry-level housing and affordable housing, and we do that in partnership with not only private and public entities, but also our own market rate housing. And that market rate housing provides us the ability to hit that target market for young urban professionals who want to live in these urban areas and have a very nice home at that starter price point, somewhere in the mid threes to the low fours. And then build to rent and fee-based building. So one of the things that we've been expanding is our ability and capacity to build larger scale developments for either institutional investors or governmental entities that are looking to provide housing on a massive scale. So these are 10, 20, 100 home communities that we can be the builder of record on, and it provides revenue and cash flow for our business and also lets us put more and more of our product out. As we grow in our entry-level focus, we also can grow, and one of our biggest opportunities is in this build to rent and fee-based space. And then in addition to that, we pursue larger RFPs and governmental partnerships through our relationships with the City of Houston, other public-private partnership entities. And through that, we have been selected to be a part of the team who was recently awarded a large development here in the City of Houston that will include 120 single-family homes. And it underscores not only the relationships that we have in the market, but also the need for a prime contractor that can perform and execute, which is what we do so well. Aisha, you got anything on that?
You don't have to keep asking me. I'm gonna jump in.
I can't see you, so that's why.
I will turn on my camera. Yes, I think also what's important to note is that we have relationships in the fourth largest city in the country that have brought us lots of opportunity, and we're looking forward to more opportunity coming down that pipeline. And so while we have the capability, we also have the access as well that puts us in position to take advantage of the opportunities that the city have to offer.
Definitely. So speaking of relationships and strategic partnerships, as well as investor relations, we are excited to announce that James Miller, formerly of Empire Communities and MHI Homes, has agreed to join our board of advisors. And with that, we are over the moon about not only his expertise and experience with over 30 years in the home building industry, running some of the largest home builders in the country, but also his advice and mentorship to our executive team and the ability to connect us to the power moves and power players on the next level of home building. So we're very thankful to have him a part of our board. We're also very thankful to have him in our council of just our brain trust, making strategic decisions for the company as we grow. He's been a part of a lot of the strategic initiatives like the build to rent and things like that. and put us on a path for uh, huge growth and just really bolstering our trajectory as a company. So we are super excited. You can definitely look up James Miller and his wealth of experience, but he is the man, and he has been the man for a very long time. And we are excited to have him as a part of our leadership team. In addition to that, we have also been expanding our outreach to strategic investors and partners to go along with our fundraise. So that's everything from strategic supplier relationships to larger investment pools and groups that can bolster not only our capital base, but our access to larger scale materials, economies of scale, and relationships to grow in the fee-based business. So we're super excited to do that. And all of these things bring value to our investors. So we are excited to bring not only shareholder value, but grow each and every dollar that investors contribute to our company as we scale up to meet the demands of the future of the Houston and Texas market. I can see you now, and I won't ask you again. So for those of you who aren't as familiar with our core lines of business, I wanted to give an overview. And I know I've talked about it during the course of this presentation, but I wanted to do a good job of letting you know what price points and what product types we hit. So, of course, we do affordable and entry-level housing. We also do mid-market. So that's anything from the high fours to about the $700,000 range. We also do custom homes that start right at that $1 million range, where that's a very niche buyer who wants the full custom experience, but still wants a Park Street home. So we're able to meet all of those buyers where they are and provide excellent service and the same level of execution on their product and their project. And we're happy to do that. In addition to that,
Can I speak to the comprehensive housing portfolio piece? It also helps us to be market resilient. And so when the market was very hot, very low interest rates, lots of buyers in the market, we were able to thrive and excel in our entry-level homes at the $300,000 to $400,000 price range, and quickly move that inventory. As the market has changed, our team has done a really good job at shifting our focus, right? And so if houses aren't moving fast in the $300,000 to $400,000 range, we saw what was on the horizon with interest rates, and then we began to hone in, or put efforts into some of our more market resilient products that we have, like the build to rent that Kevin is going to talk about, and our custom homes. And so we have a good eye for what's to come, and we also pivot in a way that we are anticipating what's going to happen in the market and how Park Street will respond, so that we can continue to hit our metrics and our numbers for our investors.
No, perfect points, Aisha. And to double down on what you're saying about being able to pivot, the beauty of even the products that we touch is it's all centered around the same chain of production. So if you look at everything from our affordable to our custom home, the same team is able to produce that level of product, and we scale up or down based on selections, materials, and locations, right? So ultimately, everybody gets an amazingly built home. It's just scaled up or down based on their price point. And even the build to rent. The build to rent is us providing our services as a contractor and a home builder to larger entities, but they want that resiliency. They want that same level of quality of product so that it lasts for years to come as it performs as a rental property or larger scale investment in the community for them. So that's definitely one of the areas that we think is our biggest opportunity. And we want to grow, especially as the market is challenged. It gives us tremendous opportunity because people are always looking for great executors and great performers and great business operators. And that's what we do so well. Same thing with the fee-based work. Build to rent is essentially building a house that someone is going to ultimately operate for rent, but the fee-based work is somebody who's willing to sell that house, and we can serve both those clients with the same product. And then finally, before we open up for questions, because we don't want to hold you too long, what is the opportunity to invest with Park Street Homes? So this is a unique investment avenue because we partnered with Start Engine, typically, which is someone that are an entity that tech companies use to offer shares of stock of our company. We're the first traditional home builder to do it on the platform, and we're so honored to not only break that glass ceiling, but open it up to our investor pool and our network and our audience and community, because now it gives them the opportunity to participate in real estate investment and housing development on a broad scale for a small dollar amount. So as little as $500, it allows investors to become shareholders in our business and not only participate in the growth of our company, but you see your dollars at work every day as the communities get built around you. So what can you expect from us? You can expect growth. You can expect amazing operations, team growth, us to continue to bring on great partners, great leaders, great strategic advisors, so that we can grow Park Street into the biggest company that it can be.
So if I can say something about this investment opportunity, when we first started Park Street, we did so with investors. Investors were very much a large part of the growth for Park Street Homes. But at the time, an investment, a minimum investment, if you would have invested with us before we were on the Start Engine platform, you would have had to bring at minimum $25,000 to invest with us, right? And Start Engine gave us the opportunity to open it up to more people. Like the slide says, it democratizes real estate investment. One of the things that I feel like has been lost on a lot of people who look like me is equity investing, and how equity investing can add revenue to your investment strategy, right? You don't have to put your entire savings into investing in Park Street Homes, but you can have a pillar of your investment strategy be in the equity of a company that has great growth projections, is considered a commodity, and so it'll always be a need for it, and also is a well-operated company and a profitable company.
No, thank you for that, Aisha. So I'm going to close there and open up the lines for questions from anybody that has them. Let's see. So you can come off mute if you have any questions. If you'd like any additional information, we will send a wrap-up email post this presentation so that we can answer questions directly. But if anybody has a question right now, we're happy to answer them.
And I'll say there is no dumb question. I'm sure if you have the question, that somebody else has the question as well. So if there is something on your mind that you want more clarity about, or if you would like a more detailed explanation on a particular component, we're happy to answer those questions at this time. But don't hesitate to ask, because you think that it's something that you should know, because I'm sure there are people that will hear this webinar and have the exact same question that you have.
Awesome. I guess we did a good job, Aisha.
This is Chandra Livingston. Thank you so much for a very wonderful presentation. I did invest. I was excited to. I actually heard of you guys at one of the seminars. It was like a lunch and learn or something. I would think I was done by it's escaping me now, but the chamber. Anyway, I was wondering, I have invested, and I want to know, there was a fee that came up from Start Engine that said if you do an extra 200, it gives you an extra insight into either what you guys are doing or Start Engine. I didn't have clarity on there, but it's like a fee that comes up with like $200 to get more insights on and I wasn't sure about that. So I'm not sure if you're aware of that, but if you could just share more information on that when and if you know what that is. But after I invested, it just asked me, do you want to buy this membership? It was like a $200 sort of a start engine thing, and I wasn't sure about that.
Hmm.
The other
So-
thing is, go ahead, I'm sorry.
Oh, just going to address that. Please continue, and then I can tell you about that.
And then the other thing is when I first invested, it had quoted like a $2, and now it's a $500, which I'm happy to do some more rounds. But is there any deadline? Like, are you trying to get a first round by December 31st, or are there any incentives to be, at the ground floor of this that you can share that so I can maybe share with friends and other colleagues that I know?
Yes, definitely. So the Start Engine, the additional $200 is Start Engine's owner's bonus. So they have a program through the platform where you're able to access early information from some of the companies that list on Start Engine and get additional bonus shares if you pay that $200 fee. That's not associated with us specifically. That's a Start Engine promo. We have bonuses that are a part of our raise that are based on amounts too, right? So if you invest a certain amount, not only do you get to add to our investors list, but then we have perks that are based in, if you invest $1,000, you get these perks. All those are detailed on our page. That $200 owner's bonus shares is a Start Engine investment thing. And then to answer your second point about the opportunity. So our initial raise goes to December 31st, and that's based on the current valuation and share amount of $2 a share with a minimum purchase of $500. We will raise additional rounds, but they always get more expensive. So every time we raise a round, that share price will go up because the company's growing. And not only are we growing, the valuation is growing with us, right? So this is the time to get in on the ground floor. So I would definitely recommend that you send it out to anybody, because the goal is, especially after this first round, to bring in larger scale strategic investors that take us to that next level. So when we do offer the next round to the public, that valuation will be much higher. So I definitely would advise to send it out to anybody. And then we had a question in the chat: who are the board of directors? So right now, James Miller is our first advisory board member in addition to our executive leadership team. We are currently searching for our next advisory board member, and we have our eyes on some people. I can't say some things, but for us, it's having the right advisors, right? We don't want to just have a board of a bunch of people we know. We want to have a board of the best leaders and business advisors that can take our company to the next level for all of our shareholders and for us. So it's not something that we're taking lightly. We're doing our due diligence. We want to make sure that not only the board members that we bring on are strategic advisors, but that they add value. And that's the biggest thing. And we're excited to have James because he's added tremendous value just from joining our board alone. The introductions and the relationships that he's connected us to and continues to connect us to are invaluable.
And I want to add color to startup investing, Start Engine, and startup investing in general. To add a little bit of color, obviously the people who get in at the ground floor of a company's start, which this isn't Park Street's ground floor, this is the ground floor of our raise. They get the best deal and they take the revenue ride up. Right. So once everybody's on board and everybody's bought in, then you kind of miss the wave. So the sooner you can get in as an investor, the more value you get out of it from a startup perspective.
Right. Okay. Thank you. I appreciate that insight because
Yes,
I'm definitely planning to do more. I just wonder.
Thank you.
Thank you so much.
Yes, and for everyone who has invested thus far, thank you so much. Please continue to share it. I truly, there's tech startup, and you hope that it takes off like a Facebook or TikTok or Uber. All tech startups that had very similar raises like this, right? So they started off with this seedling of an investment, and then they really took off. And that is the goal that we have for Park Street, but also you can't, because of SEC regulations, you can't say safe investment because there's no such thing as a safe investment. However, I will say safer investment than, hey, I have this really great idea and I think that it's going to work. And so I'm going to invest in it. And if it actually works out, then, I'm going to be like an Uber investor that from the beginning. This is more of, hey, there's this startup, the ability to invest equity in this company, but it is an essential service. They provide an essential product. So it's kind of like toothpaste. Is toothpaste going away? If you're going to invest somewhere, you might want to invest in Colgate because they have a strong track record and it's a necessity. And so that's kind of one of, I think, the advantages of investing in Park Street Homes is that the fact that we're a commodity and we're investing in, and you're investing in something that is a need that needs to be met. Housing and affordable housing is in high demand. It is in all of the newspapers, but it's also on every legislator's mind, every politician's mind, and they all have to address this. And so we're just getting in line. We're saying, where's the money? We're following the money and we're making an impact. So it's beautiful that we get to follow the money. So wherever the government is saying there's a need, we're in line for that, but also we get to make an impact. And so there's the altruistic value to it as well.
Hey, good evening, guys. So thank you so much for this this presentation. It's been fantastic thus far. I'm trying two things. I'm based out of Dallas, and so you've made mention of the fact that you guys are looking to branch out of Houston and start going into different cities. What do you anticipate that outreach into those different cities will look like in this particular journey? And then B is just more from a tactical standpoint to understand kind of like your last year's volume versus next year's volume with this fundraise and where you plan to go. So just trying to get an understanding of a little bit more finer details on some of the growth you guys are expecting and projecting.
No, for sure. So to touch on your first point about expansion, our goal is to expand into the Dallas market as our next market up. And that's around 2025 currently. We're looking at some opportunities if we're able to secure a government public partners where we can do something, and we have some connections in the Fort Worth area right now that they're looking for large tract affordable housing. That would be an opportunity that would usher us into that market possibly a little bit sooner. And our goal is to staff up. So what we're using these funds for is to not only build our team, pursue these larger opportunities, but give us the runway to explore those next markets so that we can secure that next 120 home development. And that would put us, okay, now you get the office in Dallas, and now you're able to go build out the Dallas team. And while we're doing that, we're also doubling down on Houston. So our projections put us around 100 homes in Houston alone by 2025. And our existing pipeline going into 2024 will be about 60 homes. And to end the year here, we're about 40. So you can see that number growing year over year. And literally that growth chart is based on the opportunity. With the 120 home project that we just secured, depending on the timeline, that would exceed our growth projections in Houston alone. In the 2024 range, we're just trying to work out the timing of when that project will start.
And here's where another catalyst for the raise came, is because we have been given so much opportunity where there's these large tract city governmental development opportunities that come up, and we're in line for them. And people are saying, you're minority owned. We like what you're doing. We like that you're mission driven. Your efficiency and capacity is excellent. Can you do this? And we're not able to meet the demand because of the staff, right? And so we have the relationship, we have the access both in Houston, and we're having conversations with people in Dallas as well. Now we just need to be able to meet the demand for the opportunity. So I'm just all excited about it because we want to take advantage of all of this goodwill that we have created and opportunities that we have. And now we're like, okay, we need the equity investment so that we can scale up and meet the demand that is, I mean, literally knocking our doors down to be a part of some of these monumental projects.
Thank you guys. I appreciate that.
Thank you.
No, thank you for your question. That was a great question. It's funny to add one more kind of plug for James Miller now that he's on our board. His last position as division manager, division president of Empire Communities, he expanded them into Dallas, Austin, and San Antonio, and we're literally following those footsteps. So his total completion was just under 1,000 homes in those markets, and that was with a startup team for the last 5 years. Before that, he ran MHI Homes. So if you ever heard of Coventry, if you've ever heard of McGuire Homes, he was the CEO essentially of that Houston division and led the rest of the country as the company grew. And they grew from 100 homes to over 1,000 homes consistently performing. So we're excited to take on that mentorship and advisement so that we can follow that trajectory. I mean, look, I'm fine with putting 1,000 homes in the ground, and I know our shareholders will be as well.
Excellent. Thanks for that.
Okay. Well, if there are no questions, if there are more questions, we're open to them. But if there are no more questions, we won't hold you any longer. We want to thank each and every one of you for presenting the questions that you had, for people who will view this afterwards, and for people who see this presentation after the live presentation. Please feel free to reach out to us via email with any questions that you may have. We're happy to do these presentations for a group of people that you may want to bring to this opportunity. And so reach out to us directly, and we can set up a Zoom, and we can talk to your friends, your families, your colleagues, anybody that you want to bless and, you know, think that they would be willing to take this ride for their benefit and, you know, the companies as well.
Thank you, everybody. Well, y'all have a great evening, and we will talk to you soon.
Appreciate it. Thank you guys.
Thank you.